Hey, the markets are alive. Now, since the new year, the crypto market cap is up a whopping 28% in a fortnight. In fact, Bitcoin is up precisely 28%, smashing through the bull market support band and currently hovering at around $20,000. Ether is up a mighty 34%, hitting $1,600 earlier today. And Solana, oh boy, I've talked a lot about Solana recently. It's up a whopping 200% from $8 to $24. No surprises there, as the fundamentals are quite solid. In this quick video, I'll talk about 3 reasons why the bulls have returned. Or have they? There is a lot to cover. Alright, if this interests you, please hit the like button and let's dive on in. Alright, now the first reason is the market's quite like the inflation numbers for December released just a few days ago. The CPI was 6.5% year on year, continuing the downtrend that we've been seeing over the past 6 months or so. But the good news actually goes a bit deeper than that. You see, the latest numbers suggest that the Fed's goal of hitting their stated target of 2% inflation, that's on track for perhaps sometimes in 2024, amazingly. Let me explain. To get a more granular idea of whether inflation is actually trending up or down, we need to look at the change from month to month rather than just the year-on-year figures that is commonly reported. And over the past 6 months, we've had the following data. In July, not much of a change at all. Then in August, inflation was up 0.1% that month. September and October, both months up 0.4%. November, 0.1%. And then in December, the latest report, we actually saw a deflation of 0.1%. We haven't seen something like this since Q2 2020, when the world locked down hard for COVID. Now, if you add up all of these numbers over the past 6 months, 0, plus 0.1, plus 0.4, 0.4, 0.1, minus 0.1, what do you get? 0.9%, which actually equates to around 1%, taking into account all the compounding that goes through. So we saw inflation go up about 1% over the past 6 months. If this continues over the next 6 months into around July 2023, well, you get 1% plus 1% equals 2% CPI over the full 12 months. That's the magic 2% annualized target that the Fed is aiming for. So I think that's why I imagine lots of people are getting excited, which is translating into, hey, let's go buy some oversold risk assets. Now, does this mean the bear market is over? Well, not quite, because if we look at some classic indicators from, say, the bond markets, actually, let me show you a polished version with some extra labels down here. So indicators like these, right? The spreads of treasury bonds of different maturity lengths, which is just another way to visualize when we get inversions of the bond yield. These are very, very accurate in predicting recessions. Right, and the numbers here are telling us to expect more pain to come in the next year or two. Now, I'll cover how to read these charts and indicators in a separate video, because in an environment where macro dominates literally everything else, you need to understand macro as a crypto investor, otherwise you will be left behind. Now, all of these diagrams here that you see are going to be in a dedicated macro article that I'll be posting on my blog. You won't want to miss out. I'll drop the link in the descriptions down below. Now, one thing I'll stress now is the devils are often in the details. For example, if we dive into the inflation data, so here, the inflation, different segments that comprise the CPI. You can look at the PCE as well, but here we're looking at the CPI. Keep in mind, they can be easily manipulated or at least easily misunderstood. Right now, the CPI is falling partly because commodity prices, such as oil, and especially natural gas, the prices are falling off a cliff. Now, this is going to relieve energy costs for everyday citizens, which is going to help control inflation. But at the same time, if you look at the US jobs market data, it continues to look strong. Right now, this is going to help drive up wages, which is going to help drive up inflation, which ultimately makes it harder for the US Fed to ease off that pedal. So overall, to get the full picture, you do need to dive into the numbers and think a bit about which sectors are really driving inflation and how that might be affecting the chances of a Fed pivot in the future. That's the way the savvy crypto and equity and property investors are looking at things to best position themselves. Now, the second reason why the markets are up has to do with the decline in the discount for GBTC shares. As you might know, for a while now, Grayscale BTC shares, they've been trading at a discount, right, compared to Bitcoin itself. Now, the discount level is often seen as a bit of an indicator of market confidence in the crypto sector. So when that confidence increases, investors such as Morgan Stanley, they're going to buy up these shares and make a bigger profit, because it's kind of like you get to buy Bitcoin at up to almost a 50% discount. So these discounts closing up, that's telling me that a lot of people might be thinking that GBTC and its parent DCG Digital Currency Group, they're all good. But as you know, DCG, they also own Genesis, who is the backbone infrastructure for a lot of liquidity and credit in the crypto space. And right now, right, these guys owe its creditors over $3 billion in the wake of FTX's collapse. So in summary, Genesis, and by extension its parent DCG, look, they're regarded as perhaps the last of the potential dominoes that do need to be resolved before we can be fairly confident that there won't be any more random black swan events that ends up dumping the entire market. Now, a third reason why markets are up, I suspect, has to do with the Mt. Gox repayments being delayed. So as you may know, Mt. Gox was one of the most infamous exchange hacks of all time, happened all the way back in early 2014, back in February. Liquidators have been working for years to return up to 138,000 Bitcoin to creditors. Now, these are investors who will be given Bitcoin that they bought for effectively $500 or less 8 years ago. Bitcoin, which is understandably a lot of which is going to be distributed and sold off in the markets, because these investors are massively up on their investment. But we got news roughly a week ago. We got the news on January the 6th that this is a can that's going to be kicked down the road to at least March, which is going to prevent any sort of potential large sell side pressure that eventuates from this distribution and return of these Bitcoin. All right, so in summary, the markets are up because, number one, the US Federal Reserve, the central bank of the United States, they might be getting inflation under control faster than we thought, which means that we might be closer to that pivot on interest rates that's going to see growth and risk on assets, like the growth stocks of the NASDAQ, and higher risk on assets like crypto, go back into a bit of a perhaps sustained rally. Number two, we see investors feeling less nervous about DCG and the Grayscale BTC shares. And finally, on the short term at least, we're not going to see a huge wallop of Bitcoin being dumped onto the markets from investors getting their Bitcoin back from the Mt. Gox liquidators. Now, is the bull market back in full swing? I really don't think so, but there are certainly some short-term trading opportunities. Alright guys, please support this video with a like if you enjoyed it or found it useful. Also follow me on Twitter, as I post a lot of time sensitive stuff there before YouTube. Have a great day and evening wherever you are. I'll see you in the next video.